when you're dealing with something, because you think about the market, you really don't have much control over what's going to go on there. Even if you're working for a good company, it's not just what they do that influences stock prices. It's a lot of other influences in the world. Hi, today I just wanted to speak about something a little bit different. And it's really a question that I've asked myself and other people have asked. Does timing the market ever work? And I'm talking about the stock market. And the answer to that, the short answer is, yes, it can. But the reality is, for most of us, it won't. Hi, my name's Dan. And when you think about what is timing the market, well, it's selling a stock when it's relatively high. So you own this stock and you say, okay, I think it's at a really nice price point right now. So you get out and then you wait for that stock price to drop and you get back in. That's timing the market. And some people, I'm talking about investors, like you and I, some people think they can do that successfully. But the reality is most of us can't, because we don't have an edge or an advantage. So when you think of what's happening in the stock markets these days, what is it? Who's got the edge? Well, your high frequency traders have an edge. They're faster than you, and way faster. And it's a clear advantage, and they exploit that on a daily basis. And then you think about some of the pros. They have these supercomputers, and they've analyzed data. They just got processes built to help them trigger, a buy or trigger a sell. And that's what you're competing against. So yes, there is people, and you may be one, or you may know someone who was successful in timing a stock and getting out at the right time and getting back in. And yeah, good for them. But the reality is, if you want to do this consistently and you're not a pro, or you don't have some other edge, you're probably likely not going to be successful all the time. Quite often you will probably fail. And I know you've all heard it over time. The best thing is if you're, find a good stock, like do your research, get to know a good stock, and then buy it and hold it. Don't be jumping in and out trying to time the market. And I've read the articles where they say if you use that approach, you will typically come out ahead over someone who's trying to time it. So that's just a reality that I wanted to share with you. And I thought, well, one other thing that I would do today is just to talk about, some of the information I've seen. Why don't I look at some of the information that, I think we all know that Warren Buffett's been really successful in the market. So I thought I'd go and take a look at some of what he had to say about, the stock market. So I'm just going to do a bit of a share, and we're going to take a quick look at some of what the quotes that I found that he has. So this is just a great one, when you just look at it and you understand that, he just says that, if you're going to do this and you're watching the market closely, and you just get that anxiety, you're going, maybe I should sell, maybe I should buy. It's not likely, that's what he says, that you're going to have a good result. So it's, it happens. Market volatility happens, and I just like, this one, which I thought was very interesting. And this is something he said to the shareholders at, Berkshire Hathaway. And it was like, no one can tell you when these will happen. And he's talking about the volatility or these big declines. The light can go from green to red without ever passing yellow. So that's how quick it can happen. So if you're trying to time stuff, just be aware that you're putting yourself at risk, that, there can be a quick change. And, it can happen so quickly that it may really catch you in a bad position. Next one, which is, I think, one of my favorite quotes of Warren, is his number one rule: never lose money. And the second rule: never forget rule number one. I just think that's a very great and good thing for us to think about if we're thinking about timing the market. It's like, you better take the time and have the time to do your research on what stocks you're buying and why you're buying them, and then, go into it with your eyes open. Realize that if you're trying to time it, who you're competing against. So maybe, if you're a pro or you're a high frequency trader and you've got the edge on someone else, that's different than what I'm talking about, which is, you and I are, typical average investor. investing in the stock market. That's kind of some of the stuff we're up against. And the other thing I thought I'd tell you about is a little story that give me some insight into how the market can change things for you. And this is really not a true timing kind of example, but it's a true example that I lived in my life. And in my previous career, I worked for, a very good company. And we traded on, the TSX, we traded on the New York Stock Exchange. And I was able to enjoy some really good years working for that company. And the other thing I got to enjoy was I got stock options. Over time, they would issue me off options. And, they typically have like a 3-year period before I could exercise them. So they'd give me a strike price, and that's what they offered me the options at. And after 3 years, I could exercise. And I usually had 7 years that I could exercise before those options were, basically dropped off. No longer had them. And I was, working there, and it was a great company. Our stock, value kept on going up, and it was a good, I had some really good success with selling my options and making a nice capital gain. And yeah, that was great because, hey, it was paid capital gains tax. So that was a lot better, right? I was only really taxed on half of it. So it was really a good outcome for me. And one day when I was talking to one of the executives in the company, and he said to me, he says, well, my advice to you, and I had a lot of respect for this person because he had done well, is that with my stock options, he says, I hold them as long as I can, right up until that 7th year, and that's always worked out good for me. So the next time one of my options became exercisable, I always set a price, a strike price that I wanted to exercise it at. And I got to that price, and I got thinking, I'm just going to wait because, I look back and that was the history. Yeah, if I'd have waited on some of my previous ones, I'd have done better. So I'm going to wait this time. Well, that was in the latter part of 2007. And if you remember what happened in 2007, 2008 with that nice little stock correction that hit and really, messed with the markets for a long time. Well, I went from where I could have exercised, made a really nice profit to, where they fell below the offer price. So if I would have exercised them at that point, I'd had to take money out of pocket to pay for those options over and above what they were valued at. So I chose not to for a few reasons. I wasn't sure how long we were going to be in this downturn, and I worked for that company. I knew it well, and I knew that there was a few little issues that were starting to build that, maybe our growth rate wouldn't be as good as it was in the past. So anyhow, make a long story short, I never exercised those options, and I lost an opportunity. I was trying to time the market in a different way, but that's what happens when you're dealing with something, because you think about the market, you really don't have much control over what's going to go on there. Even if you're working for a good company, it's not just what they do that influences stock prices. It's a lot of other influences in the world. So what I say to you, if you're wondering, does market timing ever work? Well, yeah, it can. And some people have been able to do it. But for most of us, it won't. So that's kind of my little thought that I wanted to share with you today on it. And it's just based on experiences and some of the, the reading I've done. And, as Canadians, we're always looking for ways to get ahead. And I just always like to make sure whatever I do, and I'm going to ask you to do the same, whatever you're doing, is you take the time to understand what it is, what the risks you're taking, and just, be comfortable with that risk. And the market, I think this is just my thought. When I think about stock markets now, they become less and less something that an average investor is going to have great success in, because there's just so much outside of your control when you're in the market. So what I'd like you to, encourage you to do, just as I wrap up here, is we've got lots of great videos on our channel. And yeah, most of them aren't related to stock market. They're related to what we teach at Ascendant Financial, which is, the infinite banking concept. And for Canadians, and, that's what most of them will be about. But we do offer different insights, just thoughts on things like, can timing the market ever work? And the other thing, if you have any interest in just what we teach or do, I'm just going to encourage you to click on that link that you see, which is titled watchibc.com. That's watchibc.com. And that's just a great training video that will help you understand about the infinite banking concept here in Canada. Anyhow, if you're in the market, I'm going to wish you well. Take care.